Welcome to the Spreadex Weekly Financial Markets Preview, Tuesday the 12th of June 2018. I'm looking at Tesco. We've got a quarter one update on Friday.
Yeah, Tesco have had a fantastic 2018. I think they're up just over 19% since the year began. It's sort of investors seem to have finally just approved of Tesco's recovery and are now fully on board with the stock and think that its recovery it's been substantial enough and sustained enough that investors have been pouring back into the stock since the start of the year. Despite, the supermarket sector still being a difficult sector, despite the Asda-Sainsbury's merger, Tesco seemed fairly unruffled by that news. I think on the day of that announcement it wobbled a bit, but broadly it's fairly confident in its position as the biggest and sort of most powerful supermarket in the country. In terms of I think it was its full year figures back in April that they sort of bear that out. I think revenue was up 2.8% to £57.5 billion, which is obviously ridiculous. I think pre-tax profit was up 795% to £1.3 billion. Obviously, that ludicrous rise is related to a weaker performance in the last couple of years, but still, like 1.3 billion in pre-tax profit you can't really argue with that kind of figure. It also introduced 3p per share dividend, which was the first time it introduced full year dividends since sort of the accounting scandal that had left it on the ropes a bit back in 2014. I think investors are just really happy with Dave Lewis's leadership and the recovery the company has seen under his sort of guidance. In terms of its figures on Friday, I think UK like-for-like is expected to be 1.6%, which is solid, but that is down from the 2.3% rise seen in the fourth quarter. So given that it has risen so sharply in 2018, I guess that is a slight danger for Tesco on Friday, that investors might, now their expectations have sort of been shifted higher, any kind of slowdown in like-for-like sales or revenue and things like that may be seen in a more negative light, a more exaggerated negative light than they perhaps would have this time last year. From our clients' perspective though, they are still buying around the 250 mark. They're still buying at the upper end of Tesco's rise at the moment. I think just because of the strength of the recovery seen in the last financial year, and there aren't at the moment any signs that will slow down significantly in the next upcoming, full year 2018-2019.
Okay, thanks, Connor.